Alright, for the first one is tax estimates. Furnish tax estimate. Tax payable estimate must be provided 30 days before the basis period begins for a year of assessment for every company's LLP, trust bodies, or cooperative society. 3 months for new companies starting operation. Starting from year assessment 2006, Section 107C/3 mandates that the tax payable for a due year must not be less than 85% of the previous year's income tax estimate. For example, Berjaya Berhad must submit an estimate income tax for payable for year assessment 2023 by 1 May 2022, 30 days before the start of year assessment 2023 using from CP 204. The estimate amount of income tax due cannot be less than 85% of the estimate for year assessment 2022 or the updated estimate. Alright, for the next one is monthly installment. Monthly installment must make equal monthly installment payments of the tax. The projected tax payable for a given year will be divided by the number of months in that year if the taxpayer does not have a 12 months of account for that account year. Okay? For example, year end is 31 December 2024. So, for the installment begins is 15 February 2025 and for installment ends is 15 January 2026.
So next, we move to revision of tax estimates. In a self-assessment regime, entities such as companies, LLPs, trust bodies or cooperative societies are expected to pay the appropriate tax for the current year. The penalty will be imposed if the difference between the estimated tax and the actual income tax payable exceeds a 30% margin of error. To avoid such a penalty, revising estimates is essential. These entities can revise the estimate of income tax payable submitted via CP 204A either in 6 months or 9 months or in the both months on the basis of year of assessment. Consequently, the tax payable for the remaining months should be adjusted upward or downward as necessary. So next, throughout the process of tax estimate, the company should document all changes, keep detailed records, and prepare for potential audit. Consulting with tax professional can help ensure accuracy, and regular reviews can keep the company up to date with tax requirement. By following this step, the company can ensure its tax revisions are both accurate and compliant with the law. So next, the penalties and payments. The IRB will issue a revised schedule for thought tax installments, and companies, LLPs, trust bodies or cooperative societies should continue using the original payment slip for paying the remaining installment based on these revised estimates. If the number of installment paid surpass the revised estimate, the remaining installment should be discontinued immediately. It's important to note that underestimating income tax payable can lead to penalties. Specifically, a 10% penalty will be imposed on the excess amount if the difference between the original estimate and actual tax payable exceeds 30% upon submission of the return. So that's all from me.
Next, I will present submission of tax return form and payments. Within 7 months of the company year's end account closing date, the return form for the year 2023 must be submitted. Any payment must be paid within the 7 months. As example, company I closed its accounts on 30 April. If the company wish to submit tax return, the date should be from 1st May until 30 November, which is within 7 months of the closing date. Amendment of return, taxpayer have 6 months from the date of filing their tax return to the IRB to make changes to it and allowed to amend the return once only. The return should specify first, additional amount of chargeable income. Second, the additional amount of income tax payable. Third, the particulars, and the last one is the late payment penalty. The amendment return is deemed as a notice of assessment. Any tax and penalty should be due and payable to the tax authorised. At 1st January 2020, the tax or additional tax payable pursuant to an amended return will be increased by 10% penalty, while 5% penalty will be imposed on the amended return furnished after has been abolished. It may trigger the penalty on the underestimate of income tax payable 30% threshold. So here is the example for the amendment.
Okay, for the last procedure, a company tax payable is assessed and settled 7 months after accounting period ends. To avoid time penalties, the final balance must be settled within 7 months, and any unpaid balance after 60 days will incur a 5% tax increase. What if a business disagree with the use of a late payment penalties? The company may file a written appeal with the appropriate hasil office within 30 days of the statement of account being issued. Okay. The company will still be obligated to pay the tax liability despite submitting an appeal against an assessment. Okay.